So this week I took a total of two trades, and this is the breakdown. So Monday price action started from here. You can see this gap. This was where market opened and we started pulling back to these discount levels. So before this Monday, I already marked out my levels. This was where I wanted price to come back to. So this was my swing low because we've already broken this structure, and I needed that change of character to pull back to this discount level before I start looking for buys again to take out this high. As you can see, if you go to the higher time frame, you're going to see that gold is already very bullish on the higher time frame. So I just need confirmation to continue the buying that is already happening, and that was exactly what we got here. When price pulled back into these discount levels, you can see we started getting that reaction on the upside again. So we actually broke out of this key level. You can see the reason why I call this particular zone a key level was because price has been reacting off of this level. We've reacted off of this level several times. Look at this, was a resistance. The moment we broke here, we flipped it to supported price. You can see how we pushed up price. When we came back to this level, you can see how price was actually rejected from this particular zone, which was actually shown by this week at this level. Same thing happened here. So we finally got to this place, and there was a little bit of rejection from this level, so we finally broke off from here. All right, and when market was already at this point, this was where I saw this market on Tuesday, and with these inducements, I already know that this was a good level to actually buy from. So all I did was, marked out my inducement, which I needed market, which is going to actually drive price back to this place. Then my entry was exactly at this key level because this is a very strong level that I've been rejecting price, and I believe if price comes to this particular level, we're going to see that rejection as well. And my stops was just below the pullback. This was actually the low that broke out from this resistance, all right, that broke this particular key level. So my stop loss at that lows, and I'm targeting a little bit above this high because I know gold is still very bullish. So even if we take out this high, which is the next drawn liquidity, we're still going to go up in price. All right, so this was the scenario or the logic behind my first entry. Now the second entry was solely based on candlestick formation. When we tapped into this key level, you can see I started watching now how price is reacting from this particular key level, and you can see at this point we had this clear morning star candle. All right, let me clean up this so we can actually see that very, very clear. So this was what formed here. Look at this. After the first entry here, you can see price pull back into this level. This was a bearish candle, and we had this bearish candle again, which has a very small body and wick on both sides. Then after that we had this bullish candle that actually closed above this candle. This is a clear morning star candle, and this was where I took my second entry. So I took my entry at the close of this candle. So the moment that candle closed, that was when